Welcome back to Investing Talk podcast.
Great to be here.
Today, we're really digging into a company that's, well, seen its share of action in the Brazilian fintech world, PagSeguro Digital.
That's right. A really interesting player, especially with earnings coming up.
Exactly. We're going to give you a comprehensive look at their upcoming Q2 2025 earnings report. This should be super helpful if you're tracking digital payments or, looking at emerging markets.
Definitely a key one to watch.
And speaking of helpful, we absolutely love putting these analyses together for you. Your support really means a lot.
It really does.
So if you get some value out of our chat today, please take a second to subscribe, maybe like this discussion, leave a comment. It genuinely helps us get this info out there.
Yeah, we love hearing from you.
And hey, if you're feeling particularly supportive, you could even consider buying us a coffee. Link's usually somewhere around here.
Keeps the lights on.
Exactly. Oh, and if there's a specific company you want us to tackle next, just drop the name in the comments. Seriously, we look at those suggestions.
We do. Always looking for ideas.
Okay, let's get into PagSeguro. We've pulled together a bunch of analysis, expectations, history, the market vibe right now, and what it might mean for the stock.
Yeah, our goal today is really to cut through the noise, give you the essential insights.
It's not just about the numbers themselves, is it?
Not at all. What's really fascinating here, I think, is the story these numbers tell, about the whole digital payment scene in Brazil. We'll look at the specifics, sure, but then connect it back to that bigger picture for you.
Perfect. All right, let's kick things off with the basics, the dates, the expectations. What are we looking at?
Okay, so PagSeguro Digital is set to report its Q2 2025 earnings after the market closes on August 13th, 2025.
August 13th, after the close.
Right.
Got it. And there's usually a call afterwards.
Yep, standard procedure. Conference call scheduled for 5 p.m. U.S. Eastern Time that same day. That's where management usually adds some context, answers analyst questions.
Right, the Q&A can be quite revealing sometimes. And financially, what are the consensus numbers we should have on our radar for Q2?
So for Q2 25, the consensus estimate for earnings per share, EPS, is sitting at 31 cents.
31 cents. How does that compare, say, to the last quarter?
Well, interestingly, in Q1 25, they reported exactly that, 31 cents. And that was actually a beat back then by about 2 cents.
Okay, so hitting the mark this time would be consistent, at least on EPS. What about revenue?
That's where it gets interesting. Revenue in Q1 came in at $857.5 million. And that actually missed the street's expectation significantly.
Missed. By how much, roughly?
The street was looking for something like $914.5 million. So, yeah, a noticeable miss. And curiously, we haven't seen an explicit revenue consensus number for Q2 25 published widely yet.
So a bit of a blind spot on the top line going in. Any whisper numbers floating around, those unofficial expectations?
Good question. Always worth asking. But as of now, nothing concrete reported publicly on the whisper front for Q2.
Okay. And official guidance from the company for Q2. Did they give any?
No explicit Q2 guidance, no. Which isn't entirely unusual for them. But management has been, consistently talking about their ongoing investment.
Right, the investment theme, expanding digital banking, PagBank.
Exactly. And finding new ways to monetize that growing user base. They seem focused on building out that ecosystem. It suggests more of a long-term play.
Which makes sense, but it probably contributes to the uncertainty around quarterly numbers.
It can, yes. Especially when you look at how the market has reacted recently.
Yeah, let's talk about that. Their track record after earnings. It's been a bit choppy, hasn't it? What does the past tell us?
Choppy's a good word. It's definitely been a mixed bag over the last 4 quarters. Q1 25, as we just said, beat EPS, missed revenue.
And the stock.
Traded down.
Sharply.
But actually gapped lower the next day. Big negative reaction.
Ouch. What about before that? Q4 24.
Q4 EPS was just in line. Revenue saw a sort of mild positive reaction initially, but even those gains faded pretty quickly.
So even hitting expectations wasn't enough to sustain momentum then?
Not really. And Q324 was even more frustrating for bulls. They beat on both EPS and revenue.
A double beat. That usually gets things going.
You'd think so. There was an initial pop, but it reversed. Broader macro concerns seemed to weigh on it.
So frustrating when the macro environment overshadows good company results. Was there any positive reaction that stuck?
Actually, yes. Q2 of 2024, another double beat, EPS and revenue. That time it led to a sharp move up that actually held and continued for multiple sessions.
Okay. So that's the blueprint investors are hoping for this time, a clean double beat with staying power.
Precisely. That's the kind of report that could change the narrative.
Given those volatile reactions, let's look underneath. You mentioned the user growth.
Hmm.
Are there any consistent underlying trends, good or bad, despite the stock swings?
Yeah, absolutely. If you strip away the noise, PagSeguro has shown pretty consistent double-digit growth year over year in users and accounts, especially in PagBank.
So customer acquisition is still working.
It seems so. And we're also seeing margins, gross margins, gradually improve as the digital bank scales. That's positive.
But I sense a but coming.
Well, the but is operating income. It's rising, but slower than revenue, and they point to heavier investment. Tech, marketing.
Right, that investment theme again. Spending money to make money, hopefully.
That's the idea. It's a classic growth company trade-off. Prioritizing market share, building the ecosystem, potentially at the expense of near-term profitability gains.
Okay, that makes sense. Now, beyond the financials, what about Newsflow this past quarter? Any big product launches, partnerships, M&A, regulatory shifts?
Well, during the quarter, they did launch some enhanced merchant financing products. That's interesting.
So,
It shows they're trying to move beyond just payments, getting stickier with merchants, offering higher margin services like lending.
yeah,
That's key for differentiation.
deepening the relationship. Any partnerships?
Yeah, they announced some new tie-ups with major e-commerce platforms in Brazil, again, embedding themselves further into the transaction flow.
Makes sense. Anything else major? Big deals? Regulatory surprises?
Not really. No major M&A disclosed, nothing significant on the regulatory front that hit the news for Q2 specifically, so relatively quiet on those fronts.
Okay. Let's talk Brazil more broadly. The fintech space there is hot, but crowded. How is PagSeguro positioned against giants like Mercado Pago or Nubank? And what's the macro picture like?
Yeah, that's the crux of it, isn't it? The secular shift to digital payments in Brazil is absolutely still happening. Huge tailwind.
But the competition.
Fierce.
Yeah.
You've got Mercado Pago leveraging its e-commerce muscle, Nubank with its massive digital banking user base.
Yeah.
Even the traditional banks are fighting back hard in digital. It's intense. PagSeguro really needs to keep innovating.
And the economy. Still volatile.
Moderately positive is how I'd describe it. Consumer confidence seems to be stabilizing, which is good.
Right.
But, you still have underlying concerns, inflation, interest rate moves. Those can always impact spending and credit quality.
Always factors in Brazil. So with all that context, how are the analysts viewing PagSeguro right now? What's the sentiment on the street?
It's pretty mixed, honestly. Reflects the complexity. Some analysts are still constructive, focusing on that long-term PagBank potential. They see the value in the digital bank strategy.
And the bears?
Others are more cautious. They worry about that near-term margin pressure from all the investment we talked about, and they question how quickly PagSeguro can effectively, monetize all those users they're bringing in.
Right. Monetization is key. Any recent big upgrades or downgrades?
Not really in the immediate run-up to earnings. Seems like analysts are mostly in a holding pattern, waiting for this report.
And the consensus price target, where does that stand?
Still hovering around the $10 to $11 per share mark,
Yeah.
which is interestingly quite a bit above where the stock has been trading recently.
Implying some analysts see decent upside if things go well.
Exactly. There's potential baked into those targets, but the execution needs to be there.
Let's switch to the technicals then. How's the chart looking? How has the stock actually been trading?
Where as of July 18th, the close was $7.93, and that was actually after a down day, about 6.6% lower, only a tiny bounce after hours.
So weakness leading into the report.
Yeah, the shares have basically been consolidating near multi-month lows. It really paints a picture of subdued sentiment, low expectations perhaps. Investors seem to be waiting for a clear signal.
Okay, near the lows, where are the key levels to watch then? Support below and resistance above.
Key support is right around $7.60. That's the recent low. If it breaks that, then you look down towards a stronger zone, maybe $7 to $7.20. That area is pretty significant. It represents multi-year lows from 24-25.
Okay, so a potentially important floor down there. What about the upside? Where's the traffic?
Resistance, you'd look first at maybe $8.40 to $8.70. That zone has acted as a sort of gap area after previous earnings. Then the big psychological level is $10.
Right, the double digits. And that lined up with the analyst targets too.
Exactly. So $10 is definitely a key level to watch if there's positive news.
And what about the options market? What kind of move is it pricing in for earnings week? Are traders expecting a big swing?
They are expecting a decent swing, yeah. The implied volatility suggests a potential move of plus or minus 13% to 16%.
13 to 16%. Okay, so not insignificant.
No, definitely implies expectations for a noticeable reaction. It's elevated, as you'd expect around earnings for a stock like this, but maybe not at, say, panic levels. Suggests a chunky move is anticipated, but perhaps within a somewhat expected range.
All right, so let's put it all together. We've got the numbers, the history, the context, the chart, the options. Based on everything, what are the potential scenarios here? Bull case versus bear case.
Okay, let's map it out. For a bullish case, you'd really want to see a solid beat on both revenue and EPS. Maybe EPS coming in at $0.33 or higher. And revenue needs to impress, ideally getting back above $900 million.
More than just beating, showing strong growth. What else?
Positive guidance is crucial, specifically around margin expansion, maybe in the second half of the year. That would signal the investments are starting to pay off. And, critically, clear proof that those new banking and merchant products are gaining traction, that monetization is improving.
And if they deliver that, where could the stock go?
In that scenario, you could see it quickly test that $8.70 resistance. And if the guidance is really strong, a move towards $10 or even higher isn't out of the question. It could really shift sentiment.
Okay, that's the upside. What about the bearish case? What would that look like?
A bearish outcome would likely involve another miss on the top line. Revenue may be below $850 million, or seeing margins deteriorate further. EPS might stagnate around, say, $0.28 to 30 cents, or even dip.
What other red flags?
If user growth slows down significantly, or if total payment volume disappoints, that could signal competition is really biting. Also, weak guidance, obviously, or maybe higher than expected credit losses from their lending efforts, any new regulatory concerns popping up.
And the stock reaction in that case?
Yeah, that could easily push the stock down to test that $7.60 support and potentially break lower towards that $7.20 multi-year low zone.
Given all that, if listeners can only track one thing when the numbers hit, what's the most critical metric? The real signal?
For me, the most critical thing is going to be net new PagBank users, coupled with the engagement and monetization per user.
So not just the number of users, but what they're actually doing and how much value they bring.
Exactly. Are they adopting the new products? Is average revenue per user, ARPU, going up? Strong user growth is great, but strong monetized growth is what really matters for the long term. That shows the strategy is working.
Got it. So wrapping this all up, what's our overall leaning here heading into the print?
Bullish, bearish, neutral. And how should different types of investors think about this?
You know, weighing everything, our leaning is probably neutral to maybe modestly bullish. Let's say a confidence score of 5 out of 10.
Okay, why only modestly bullish? Well, expectations are pretty low, and the valuation seems relatively cheap on a trailing basis, maybe 6.5 times earnings. So there's room for an upside surprise. But there's just no smoking gun, no strong evidence yet of that clear inflection point. And the risks are real, that intense competition, the recent revenue miss. It keeps the confidence tempered.
So how might different folks approach this depending on their risk tolerance?
Okay, so for someone who's pretty risk-averse, honestly, it might just be best to sit this one out. Avoid holding through the earnings event itself. The history shows too much volatility. The near-term picture is cloudy.
Makes sense. What about someone willing to take on more risk?
For the risk-tolerant crowd, you could look at defined risk option strategies, maybe a straddle or a strangle to play the volatility, perhaps with a profit cap, or even an out-of-the-money call spread if you're leaning bullish but want to limit cost. Implied vol is up, but not insane, suggesting a move is expected.
And for the long-term believer, someone who likes the Brazilian fintech story.
For the long-term investor, if you really buy into the secular growth in PagSeguro's position, maybe you'd consider initiating a small position on weakness, perhaps after the earnings dust settles. But position sizing is absolutely critical here given the uncertainty. Keep it small relative to your portfolio.
Really great breakdown of the different angles. This has been super insightful. As we wrap up, thinking about everything we've discussed, the competition, the strategy shifts, what's one final thought you'd leave our listeners with?
I think the big question PagSeguro faces, and what this earnings report is really a test of, is this. In such a fast-moving, cutthroat market like Brazilian fintech, how do they genuinely carve out a unique, defensible edge?
Right, beyond just processing payments.
Exactly. It's not just about the Q2 numbers themselves. It's a test of their whole strategy. Can they differentiate? Can they deepen that user engagement? Can they actually monetize effectively against such strong rivals? That's the fundamental strategic challenge they need to answer.
A really critical point to consider as we wait for those results. That definitely wraps up our detailed look at PagSeguro Digital and their upcoming earnings. Thank you so much for tuning in to Investing Amp Podcast.
Thanks, everyone.
We really hope this discussion helps you navigate the market with a bit more confidence. Don't forget to subscribe, like, and comment if you found this useful. We'll be back soon with another in-depth discussion just for you.